morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Tuesday, April 8th. Higher trade across the ag space here overnight as markets draw support from a sharp rebound on Wall Street. Futures right now are showing about a 2.5%, maybe even a 3% rebound here in major stock futures indices. Funny how markets in history have a way of repeating themselves. If you look at the S&P weekly futures chart, the overnight low from Sunday night coincides with a 50% retracement of the rally off the October 22 low near 3,500 to the all-time highs here just a few months ago at 61.65. The last time this happened was in October of 22, and that was a 50% retracement of the rally from the COVID low in March of 20 to what was then the all-time high at just over 4,800. That was in January of 22. So time will tell if Sunday night's low did score a major technical low for the stock index. In the ag space, corn is 1 to 2 better, beans 7 to 10 higher. Both products are higher, meal $2 to $3 better, while bean oil is up 25 to 30 points. Wheat prices are 4 to 7 better, while crude oil is slightly higher, hovering near that $61 per barrel level. The markets just seem to be gaining some confidence that the Trump administration will be able to negotiate some better trade deals with the vast number of countries impacted by the announced reciprocal tariffs last week, or that the economy can at least avoid a major downturn. The big wild card, however, does remain China after President Trump yesterday threatened an additional 50% tariff on Chinese imports if they follow through with their 34% retaliatory tariff. Yesterday's crop progress did show 2% of the country's corn crop has been planted versus 3% a year ago. Louisiana and Texas lead the way there at 92 and 59% respectively. Both are just a touch above their historical average. States impacted by heavy rains last week that may require some planting showed Arkansas had 31% of the crop seeded, Missouri at 6%, Tennessee was only 3%. Look for little progress to be made in these areas this week. Fortunately, rains are expected to be light over the next week or so, enabling fields to dry down, hopefully enabling farmers to return to the field sometimes next week. Bean plantings averaged 11% in both Arkansas and Louisiana, so a little bit of a start there as well. 48% of the winter wheat crop is in good to excellent condition. That was exactly in line with our expectations and below the 56% from this week a year ago. 5% of the crop is headed. That's in line with the 5-year average. And spring wheat plantings were reported at 3%. That was in line with a year ago and also the 5-year average. USDA on Thursday, we see slightly higher wheat stocks, no change to the bean ending stocks, holding steady at 380 million bushels, while we've got corn stocks slipping 25 million to 1.515 billion due to higher exports. The only change in South America I have is a 2% increase in the bean production in Brazil, up to 171 million metric tons. Fresh 2-week high for corn here overnight as July kind of flirts with its 100-day moving average at 473.25. As temperatures start to warm up in the western corn belt this week, we should start to see planters roll. We could use a little bit more moisture in that area, though, as drought areas have expanded. Much slower in the east with the rains this past week in cooler temperatures. July beans back above $10 a bushel. Both products are also slightly higher, helping support crush margins, partially due to the closing of a major crushing operation in Argentina that has filed for bankruptcy. The soy complex will continue to be very sensitive to U.S.-Chinese relations. In inside trade for wheat prices overnight, more rain is needed to help fill in some of these dry conditions in the southern plains. Thank you for listening, everyone. I hope you have a great day.